It's Tuesday, that means it's Trading Tip Tuesday. I wanted to discuss some dip buying principles, some bearish exhaustion principles. Some of this I've discussed briefly in the past, but let's bring it all together for a real world example. So obviously we're down 10 to 20 odd percent on various cryptocurrencies here. These principles will apply to any chart you look at. I'm going to talk about BTC and ETH specifically, but these are the types of things I'm looking for when I'm trying to figure out how exhausted are the bears in the moment. How deep can this go? The first thing I ask myself when we get a big drop is try to figure out what happened. Was it some news event that I wasn't aware of? Was it some news event that someone else was aware of and I wasn't aware of? Is there some sort of technical reason? Is the chain falling apart? Stuff like that. We had some Tether news that was rumored to be coming that may have played a role in this, although the Tether news was rather positive. It's interesting that it lined up the way it did, as it tends to do. We don't always need a catalyst for events like the past 2 days, but they help, obviously. So I'm leaning on technicals here, and where am I looking? I'm always looking for very basic support and resist first. So you're always looking to local highs or local lows if you're trying to sell a top, that sort of thing. In this case, the previous local high was between 40 and 42. And much of the time, you're better off just thinking of this as a broad range, not an exact price. Because what you're going to want to end up doing, not investment advice, but something you could do is layer bids. It could be this simple. Just layer bids from 40, 47 to 42, depending on the exchange. This is Bitstamp. Depending on the exchange, whatever the highs were from the wick to the body of these candles. However you want to do it. But at that point, it would be 30% from the top or whatever it is. And for me, bare minimum, I'm comfortable with buying there. That was the previous all-time high. That was a breakout point. There's some sound logic there, at least, for a bounce or bounce attempt. And if we want to get a little more specific, we can look at other massive down days. So let's look at March, right? March 2020, something that caught many people off guard. If we look at our final destination, which could have been 0 but wasn't, we ended up bouncing around on the two previous support resist areas. Not exactly big brain to understand that, but this is when people talk about support and resist, they're always talking about the left side of the chart to predict the right side of the chart. So we had a stab down all the way into this previous consolidation period. Most of the bodies of the candles ended up on the next highest consolidation period. So it's not too crazy when you see that, and we can look at the replay and look at the VPVR. So this is the volume profile at price. And so if I was on this day, if I'm looking at the VPVR, I'd expect some sort of support at 8.2. I'd expect some sort of support to a lesser degree at 7. I'd expect nothing really below that. So there's a massive gap here until 5 to 5.5, and then another gap between 4 and 5K. And that's really how it ended up working out. Here was your support at 8, and then a bunch of nothing, right? The support at 7 didn't really matter, and just the gaps played out. Now, you don't see the gaps on charts like this in the volume unless you have VPVR on to realize, there's no support below 7. You can think of it like that. But even still, the candles play a little tricks with your mind because you're thinking, yeah, there's price there, when in reality, not that much volume relative to other areas on the chart. So tons of volume at the lows, tons of volume at the intermediate lows, and virtually no volume where price just cut through a knife like butter. So we zoom in a little bit, apply this to the BTC chart, and I turn on VPVR. This is a pitchfork in the background as well, but if we turn on VPVR and I'm relating this back to this basic principle of just support is where price stopped last the first time, local highs. There's more and more volume support between 30 and 38 relative to price now to 42. So if this is a probability game, I'd expect bounce, consolidation, potential wick into zones in the 38 to 42 range, more so than the 42 to 46 range holding as support, just because there isn't a lot of price normalization there. Something else we can always look at is trend metrics. stuff like the cloud, I talk about this red line a lot, the Kijun, because typically it acts as an extremely strong support. Now we hadn't touched the Kijun since September. We touched it twice in January, and it looks like we're setting ourselves up for another tap of that in short order, which again is around 41.42. So all of a sudden we have all this confluence of support at that area. So in the back of my head, I'm thinking, okay, we have support at 41.42. What do I want to see to be satisfied with that? Let's say I set spot bids in that area, and what do I want to see to be satisfied to open margin orders in that area? So let's look at that March stuff again. If we look at the March drop from 8K to 4K, we had a series of what's called bullish divergences. So we had lower lows in price, and these are always measured from the body of the candle, not the wick, because RSI is calculated based on closes, not highs or lows. So if we look at the candle bodies and we say, okay, we got a lower low obviously in price. Did we get a higher volume on that second low? No. Did we get a lower RSI on that second low? No. Did we get a lower MACD on the second low? No. So this is what's called a bullish divergence, and you had it on 3 different metrics. It was pretty clean, it was pretty obvious, and this is going to change. The strength of these is always going to be different depending on the time frame you're looking at. So if you're looking at it on the 1 minute, the bounce potential or strength is a lot less significant than looking at it on the daily. Similar to the 30 minute, the hourly, the 4 hour, the higher the time frame, the more significant it'll be, the higher the bounce potential, that sort of thing. If we go to the hourly now for BTC, do we have any of that stuff? So we have a lower low, definitely. We have a mild bullish divergence. So when RSI is equal to the previous RSI, it's less significant, but certainly not there. There wasn't more momentum on the second low, right? So it's definitely bullish divergence. To what degree is it a bullish divergence? It's relatively mild. Was MACD greater or lesser than the previous low? It was greater. So momentum wasn't exactly much less than the previous low. This says overall the bears are probably still in control. There's still bearish momentum to be had here. Momentum is probably still significant enough for the next series of lows to hold. So that was BTC, and the big thing again, just basic stuff. It isn't rocket science. If there's a confluence of support between 40 and 42, I think there's a yearly pivot in there somewhere as well. If there's a confluence of support for that area, and we have a series of bullish divergences, then the probability increases greatly that will be a significant bounce attempt. Something else I'll mention here, when you have a big down day and it's bought up significantly, what you don't want to see on the next day, if you're bullish, is a breach of the previous lows of the previous day. So the fact that we had lower lows here from the wick low of yesterday hints at further bearish continuation rather. Crazy concept, I know. We make lower lows, we go lower, but if you're looking for a sentiment gauge, if we get a massive wick and we didn't break this low, if we matched it or made a lesser low today, then there would be a significantly greater chance that we'd be looking for a definitive bounce there. Here's ETH on the daily cloud. Here's that mean reversion line, and it hit it a couple times in late November, early January, and essentially touched it again today. So overall, we're looking at 1350 as sort of the high time frame trend support line. And if we look at the hourly ETH stuff, much like BTC, we're getting less volume, but the oscillators aren't that convincing that this is done. There isn't a stark bullish divergence to really cancel any of this stuff out. Again, you get that equal RSI, MACD greater. So this isn't really convincing me that we're done here. If we look at the 30 minute though, also the same thing. You're getting higher RSI on lower lows, but MACD not yet convinced. Definitely volume petering out. If we look at ETH BTC, it's the same story. There's not a lining up of the stars here for a considerable high probability bounce attempt. It says there's probably still some bearish momentum in the tank. If we look at the VPVR levels and just the horizontals, the previous all-time highs, the previous local highs, prior to this breakout, ETH had a ascending triangle type pattern, which has a bullish bias. That broke up, great. This has now retraced that entire move. back to the previous breakout point, support becoming resistance, resistance becoming support, ideally. So looking at that VPVR profile, no surprise here. Very little support from 17 to 15, and much greater support from 12 to 15. So thus far, this level has held as expected based on local highs, based on volume, based on resistance turning into support. Then one thing I always like to talk about with divs, just lastly, is the duration of a div can last for quite some time. I always point to this. This is US oil on the weekly chart from 2015 to 2016. That was a year-long growing bullish divergence. So you'll often see me say, is it a growing bearish or bullish divergence? Meaning, do we have a series of lows on less and less momentum? And we can argue about whether or not this is a true divergence over time, but I think it's pretty clear you're getting lower lows on less momentum over and over and over. And that's brutal to trade through. But typically there's other influencing factors there. One thing I didn't mention when you're looking at bounce attempts here is candlesticks and chart patterns. It's always good to see a W double bottom, Adam and Eve. You want to see a dragonfly candlestick. You want to see tweezers, so double wicks. All things I've discussed in other videos. So hopefully this helped highlight what I'm looking for in the lows here over the next couple days. And let me know what you're looking for in the comments in the video below. And if you want to check out how I'm trading this, you can pop on over to Enzyme, which is an on-chain copy trading system. Essentially, you can look in the Techme Capital ETH BTC pair and you can see the performance, and you can always look at the trades I'm making as well. So this is a no LARP situation over here. These are real deal. You see what you get. I wear my analysis on my sleeve, and you can watch me trade it, copy along, or just, counter trade me as well on Enzyme.